Look, we always think it's a good time to invest in small caps. And if you look at what we've been doing at the Federated Kaufman Fund over the last 30 years, is trying to look for enduring secular growth companies, companies that can really transcend economic noise and have idiosyncratic characteristics that could create accelerating results on a year-over-year basis. And that formula has worked for us over time. And last year, small caps in general underperformed. So it's no doubt that you've had a little bit of a bounce here. But if you think over the long term, this is a great place for investors to look.
You have three stocks that you currently like. And I'd ask you just to sort of go through them. Why don't we start with ShotSpotter? And I want you to tell us about the stock and why you like it. But tell us how it becomes a classic pick for your fund. What are you looking for and why does it fit the criteria?
Sure. Look, at Federated Kaufman Funds, we spent a lot of time on the IPO market. And this company came public about 2 years ago and was a very small offering and was not a very excitable deal. We spent a lot of time. ShotSpotter does what it sounds like they do. They have a robust system of software and sensors that can identify exactly where a shot is fired in a city. So this is fantastic way to increase the safety of cities. Very logical, low-cost solution. They have no competitors. Over 80% of shots that are fired in a city do not go reported by 911. So we spent a lot of time doing due diligence with local municipalities and police departments, and we found a company with very little competition and very strong growth. So this is a classic stock for the Kaufman Fund.
Astronics is another one you own.
Sure. This is a company based in upstate New York, Astronics, an aerospace supplier company. They have the leading franchise in in-seat power and lighting. A pretty good business. If you look at Boeing, they're at all-time highs, have all-time high backlogs. So the aerospace sector is a very good place to be. What's great about Astronics is that people are missing a fundamental pivot in their business. Number one, they sold a test business, which was non-core cyclical part of their business, for $180 million. That's more than 10% of the company's market cap that they're receiving in cash. The stock does not move at all. In addition, they have a new offering for in-flight connectivity in the business jet market that we think is going to grow in excess of 50% this year. Astronics only has 33 million shares outstanding. You throw a couple $1 million to the bottom line, and the street estimates for 2019 look terribly low.
In 30 seconds, tell me about Trex. Even I know this one. It is the composite deck materials manufacturer.
Good. I'm glad to hear you know it. Did you know that Trex is the largest recycler of plastic bags? That's what they use to make their decking. Look, composite decking has tremendous amount of benefits over historical wood decking, yet composite decking is only 15% of the overall deck market. Every 1 percentile that Trex gains, and they're the leader by far in that market, is $50 million of business to Trex. They have a clean balance sheet, no debt, very high incremental margins, and this company should grow regardless of if the housing market starts to slow. So it's a very exciting long-term name for small cap investors.